I'm going to cover AMC, American Eagle Outfitters, GNPX, and the SPY today, and talk about trend lines. Okay, you can see what my screen's looking like today. These are the stocks I want to cover. Let's start with AMC because this is the stock everyone is interested in. I think most of my viewership is here because of AMC. You can see on starting on the daily chart, you can see the big fall from reaching above that gap zone unsuccessfully, and the downtrend continues. The RSI is now reaching back below the oversold reason, no surprise there. Today's volume was pretty low, below the 30-period average. That's okay, the price is moving downward. I expect to see resistance at this $14 level, $14.24. This was the price target for the descending triangle drawn up here. And yep, there we go. It's a big old triangle. So I expect more downside than a bounce. This could lead to a couple of different things. It may lead to another bottoming tail forming up, right? Kind of like what we saw back here. You can see how the tail of this candle reaches below that level and then bounces higher. We could see something like that, or we could just see the price pierce through it and fall. And if that is the case, where's the next point of support resistance? I'm gonna go ahead and zoom in and we'll talk about that a little bit. Go to auto zoom, please, and back us way up. So I think this level way back here may provide some support. What was that high? That high was 1454. All right, I'm gonna go ahead and click on it and just be like, hey, 1454. And it's crazy. It's crazy to think that we could go all the way back there. And this is the danger of falling past that level, is that the next support is really low. You know, around $8, you know, momentum could easily carry the price to $7. It's possible, could happen. Let's go ahead and zoom back in over here and see where we're at. You know, that's marginally higher than this descending triangle target. So the price really could be in a very vulnerable position, especially if the SPY turns down. Zooming in now to the 15-minute, let's take a look at what this reveals. You can see just this nasty stair-stepping, and then boom, this bounce right here. And I have been asked whether or not I see the potential for inverted head and shoulders here, and I'm just saying no. I'm just not. I just don't see it. I think that the shoulders are asymmetrical, and for the price to confirm that pattern as valid, it's going to need to pass above this peak here, which is a massive volume event. I'm really not optimistic about the price of AMC. At least not bullishly. If you're a bear or if you're trading the downside, this is looking very, very tradable. And you can do that. Be free to trade profitably. Trade the trend. These are mantras that are just in the industry. People do it. It makes sense, right? Why fight the trend? Feels bad. I, of course, see a nice measured move down setup, this being a consolidation zone. This would be the first leg of the measured move down, and then the retrace up into the 70% at least, and that did occur, and now we see the price falling back down. Volume is dropping off, so this downtrend may be losing steam, which is why I think we might see a bounce. But I'm gonna go ahead and clear this off, and I'll draw another chart pattern that I believe is shaping up. Let's clear the drawing set. There we go. And I want to do this right there, I think. I think what we're looking at is a right angled and broadening formation. So I'm not going to calculate these price targets yet because I still need more touch points. We do have this first touch point back here at the beginning, but only a second one on the bottom trend line. I'm going to need to see a third touch. That third touch would confirm the pattern. This means that AMC could fall, right? Bounce, and then form a partial rise before declining farther to the target. This is what I see being most likely, and that does look like a head and shoulders top, and that would confirm as the price moves past the neckline. This is what I believe is most likely for AMC. Just looking at the charts, that's what I see, and that's it. I'm gonna go ahead and move on to American Eagle Outfitters. We can see that American Eagle Outfitters has also been in a downtrend. It trades in the IWM, the Russell 2000 ETF, with AMC, so they often share the same trends. As you can see, it's not suffering a decline nearly as badly as AMC is. I'm going to turn on my daily chart drawings here, and you can see that there is an uptrend and that the price has just closed below it. This is bearish. You can see that the RSI has reached oversold, and the volume is, well, it's on par. It's not necessarily high, it's not necessarily low. The closing volume was pretty high, it always is. Implied volatility is starting to rise, so it is possible to see a further decline in American Eagle too, although I would expect a bounce at that bottom trend line. I am accumulating long shares of American Eagle Outfitters. I'm trying to get to 100 shares. I did sell a call at a loss today. I do think that there's going to be some more downside before a bounce. It would be nice, however, to see the price rebound off from underneath of this trend, but that does not seem the most likely, and I just continue to buy and hold this stock. Let's go ahead and just plow through this. I'm going to go by GNPX really quick. GNPX is having a weird time. It's like the price is floating, right? I'm not sure how to chart this or what to chart. Really, it doesn't make a whole lot of sense to me what's going on. There is some support and resistance here at the 70% retrace level, and that is being respected, which is good to see. That is bullish. And let me just try to find another chart here. You know, these trend lines, these weekly trend lines, we're in the middle of the weekly trend lines. So I'm just holding. The recent uptrend was broken today, but the price hasn't set a new low since it broke out from that trend, so I can't start a downtrend either. It's just kind of a no man's land, you know? Pulling up the SPY next. Yeah, that's weird. That's weird. You can see this downtrend was broken and an uptrend was established. And now the price seems to be keeling over, and that gap looks pretty bearish, to be honest. That's a bearish gap if I've ever seen one. This just doesn't look like a great chart right now, does it? You can see these three. This is a bearish formation. I'm not sure what to call it, but this is going to be difficult to break out above. I think what's most likely is to see the SPY drop to this $440 level, and perhaps then touch this trend line and then move higher, if it's going to move higher. Seeing the RSI keel over just over 50 like this is pretty bearish, and volume has been relatively high for quite some time now. Okay, I have a nice blank page pulled up now. I'm on the SPY chart, but I just want a place to draw. I want to talk about support, resistance, trend lines, and chart patterns. My understanding after having really dived into these chart patterns is that the chart patterns themselves are just visual aids and expressions of how trends are moving through horizontal price action, right? Through horizontal levels of support and resistance. So let's just start drawing. Let's say we have a stock price and it's going up and it's going down and it's going up and it's going down, right? And you know, eventually we start to form a downtrend as soon as we get 2 or 3 different touch points that line up nicely. So in this case, okay, we can draw a nice trend line right there, okay? I'm gonna go ahead and color this one red because it's acting as overhead resistance. We're just gonna use that one. There we go. And you can see that the price in this instance did not reach it. Instead, the price turned at this prior valley. Okay, so here's a level of horizontal resistance, okay? Now, the price doesn't have to follow any rules. A bullish event can happen, good news releases, whatever it is. There can be a breakout, right, of that downtrend, and maybe it bounces off first, but boom, it blasts through it, okay? Now, the price has stopped once here before along this horizontal support zone, and it's likely to reject, right? So as the price rejects, it may retest this downtrend, all right? And we have a former valley here that may also act as support. And if that's the case, what happens is the price may bounce. All right? Do you see how this starts to look like a bottoming pattern? Interesting, right? So what? The price doesn't really form a head and shoulder bottom until the price can break the neckline. All right? And what this neckline does is essentially connect minor highs together that form an upsloping trend line. And I'm going to go ahead and color that red as well, because that's going to act as resistance, isn't it? Now, if the price can rise above that level, it has officially moved above the level of resistance that dictated where these armpits formed. And by so doing, it creates a new minor high. And once we have this new minor high, guess what we can do? We can connect these lows. These are now a major and a minor valley, and we've established a new trend line. I'm going to color this one green just to show that it's acting as support for the price. Okay, and that would end this downtrend. And so that is how a horizontal level of resistance can affect the movement of these trends, and how when the price breaks above those levels, we start to see things that are familiar to us, like an inverted head and shoulders pattern. And then there is a statistical likelihood that the price will continue to move a certain direction for so far. And what's interesting about the head and shoulders pattern is this, that it shares the methodology for price targets as trend lines. So let's just go back to this trend line, 1, 2, 3, 4, 5, 6, 7. It's kind of a weird wave pattern, but here we are. Now, Bulkowski would say to measure the price target for the breakout of this trend line, you're going to take the height that is furthest from the trend line and measure to the trend line itself, which in our case I believe is right here. I'm going to go ahead and make this cyan so it's less confusing. There we go. And he says you want to apply this to the breakout price. And he says that's the target right there. Well, if you were looking at the head and shoulders pattern, that's the same. You're going to take the head to the neckline. It's going to be very, very similar. In fact, I'm just going to duplicate this, and I'm going to pull it over and pull it up. You're not going to reach too much further beyond where that head and shoulder price target is, or that trend line price target is, to come up with that level, right? Interesting, isn't it? They're very, very, very similar. So what I want to demonstrate is how the price moves through horizontal levels of support and resistance in trends, and as those trends break and the price interacts with those levels of horizontal support and resistance, that's what forms our chart patterns. We are, when we're charting, just observing trends, and it's important to keep that in mind. So I also want to show how the price can start to form different potential patterns as the price moves around horizontal support and resistance. So I'm going to go ahead and clear off these drawings again. Remove drawings. Clear drawing set. Yes. Okay. So I'm just going to draw some horizontal levels of support and resistance because it's going to be a little easier for me if I just have some of these drawn, right? And there we go. I don't need to draw them all the way across, but I'm going to do 4 lines. Sure, why not? Okay, so let's just say, let's start with an uptrend, okay? So the price is rising, and it's passing through support and resistance, and it stops. It encounters a level of resistance that turns the price down, and it begins to fall. Right here, this can be a potential pattern. We have the potential for 1, 2, and then a third wave up, and this would be a measured move up. This could be a flag right here, all right? And this congestion could be a half staff. And then the second leg would be essentially the height of the first. And this would be a very, very, very strong bullish move, right? Well, let's suppose that the price doesn't break out. It forms that flag and then it turns back down. All right, essentially, if the price continues to fall in a dramatic way, you have a V top. That's a price peak. Inevitably, the price will bounce again, right? So let's just start drawing that. And let's say the price doesn't even make it to that prior high. All right? Let's say it stops halfway. There's less momentum moving up than originally, but the price is holding on to some of its gains. If the price continues to move higher from this point, all right, we see a V-type bottom form. And if the price continues to move higher, we're now going to be looking at a measured move up situation, right? 1, 2, and 3. But I don't want to go backwards, I want to go forwards in terms of valleys and peaks. So let's say that we have this bottom forming, and it's not a V-type bottom because it fails to reach high enough, and instead it falls somewhere between the start of the uptrend and the top of that uptrend. The price here would turn down and start to fall. Now, where it falls is going to dictate what kind of chart pattern we have, right? There's a lot of possibilities. If we only see one extra valley, this could easily become a double bottom, all right? And as the price passes that intermediate high, it confirms it's valid, and there's a strong likelihood that the price will move higher. Very good. But what if it doesn't? What if there's even less buying pressure, right? Then we're going to see another peak. And as the price falls, it's going to be looking for support or resistance. Now, if it falls down here, below this horizontal price range, we're going to start forming a channel probably. We're going to say, hey, let's connect those two levels together, right? And let's start looking for a downtrend, a sustained downtrend. Or we can see that and say, hey, maybe that's a bullish Gartley. But nonetheless, the price can begin to form a different kind of downward pattern. If support is found at that previous level, all right, there is an opportunity to form a triangle. There's going to be a level of resistance right here along those two peaks, because this is just how we draw trend lines, right? We connect peaks and we connect valleys. And as we do that, we come up with these levels of support and resistance that can help the price turn into these different familiar chart patterns. And at some point, the price may break out of that pattern. And that lower level would be defined by this price level right here, this horizontal support and resistance. And so you can see how this downtrend in the price and this horizontal support and resistance are the levels and trends that are creating this chart pattern, right? Now, what if the price breaks out to the upside? This starts to look like a double bottom again, doesn't it? And there is possibility, of course, for a third valley and then be a triple bottom, right? But what I want to show is how the price can go from a V-top, all right, to a flag, and if that flag breaks, then we start looking for these bottoming patterns, and if not bottoming patterns, then we're looking for triangles, which essentially are patterns of consolidation. So you're always going to see strong uptrends, big moves, and then you're going to look for support and resistance to start forming those two touch points of your next pattern. And it's possible too that you're looking for trend lines as well, which is why it's always important once you form a trend line that you don't move it. For instance, as this price fell and then bounced and we formed this peak right here, we would draw this trend line. And it's important to not move that trend line. If you find yourself charting and you keep moving trend lines like this, you're not having a productive trend. The trend will be what it is, and you should not edit it unless you really need to, I don't think. So as this price forms this trend line, it can fall and find this horizontal support, and it may even move past that trend line. This doesn't mean that you should move this trend line higher to accommodate that higher peak. No, leave it where it is. When the price moves above a trend line and moves back down and within a pattern, and here you would see the start of the pattern, 1, 2, 3, 4 touch points. And we call this a false breakout, right? A throwback as the price moves higher and then moves down. And as the price moves down, it's likely to find that support again before breaking out to the upside. And so you can see that this analysis of a descending triangle would still be valid even though one of the points in the chart is actually outside of the pattern. This is important because the price doesn't really care to form chart patterns. What it's doing though is it's moving along trend lines, and it can overshoot a trend line and then fail to continue to rise. That's what I want to talk about just a little bit. It's probably not very much a little bit, but a lot. Let's go look at AMC and I'll tell you what I'm talking about in context. Let me just pull up the daily, and I'm in blank. I'm gonna go ahead and clear my drawings. Okay, so let's just start charting stuff, right? Let's take the all-time high, that's 72.62, and let's go to that first minor high right there and just draw a straight line. Okay, this second touch point right here comes into alignment really easily. And I'm going to guide my line between those 2 points, all right? So there's a little wiggle room through here. And I'm just going to go down. And I'm going to stop right about here. So this is a big move down. Woo, the price plunges, it jumps, and I don't draw another trend line, I don't move it, I just leave it as it is, right? And now I'm going to start connecting our valleys, okay? So here's our first significant valley. The price rises, and I'm looking for the next low. The next low, not one higher, but the next low. The price rose here, right? So there would be a level of horizontal resistance here, and you can see that. But the price quickly fell through that level. So 3 or 4 days later, we would say, okay, that was a really premature level there, but we're going to keep our eye on that. And really, it's this valley here that's creating that level of horizontal support and resistance, not a chart pattern, right? Not a trend, but rather just a valley. So I'm looking for the next lowest low, and I find it right about there, right? Okay, so this is where I can say, hey, I've got, let's see here, 1 touch point, 2 touch points. I'm not going to count a third because the price hasn't returned to the lower trend line yet. I have 1, 2, like 3, 4, but I need 5 to make a pattern. I don't see one there, right? As the price continues to fall, I'm going to try to I'm going to look for that third touch along the bottom line. And I'm going to take wicks of candles and their tails also, like here, the tail of this candle, and also this pipe bottom. These are 2 indications that the price passed through whatever horizontal level this was a little too far, right? So I'm going to be okay to cross the price through it a little bit if it can give context to the price. And it can until about right there. And then right away, as the price bounces from this level and I see these pipes connecting like this, and this doji, this is perfect. This is a great sign that that's where that line's supposed to be. I can say, hey, I've got the start of my pattern. I have a touch point here. I have a touch point here, and here, and here. So I have 1, 2, 3, 4, and 5, and I'm going to call that 5, even though that this peak didn't touch this trend line. It's pretty close. That's a partial decline. Or a partial rise, I'm sorry. And it's partial because they didn't fully reach that, but it came close. This is kind of a discretionary thing, right? The price did rise above this horizontal level of support and resistance though, which is really important when you're talking about declines and rises. So here you go, this is a falling wedge, right? And we can start calculating the price target for that falling wedge. And here the price failed to reach that level. I believe that target was up in the 60s. So the next most productive thing to do after seeing that pattern break out and set a minor high after the pattern would be to take our last touch point and try to form an uptrend, right? Which we did have right here. And you can see how I'm using the very bottom tail of this candle to draw that trend line. Now it is a tail, so it might be better to just use what the opening and closing prices were. And this gives us a better trend line. Now technically it's an internal trend line because we are overriding the price a little bit, but again, I'm going to use some discretionary judgment there. So the price comes up, down, and then when it sets this new minor high, that's when this trend line gets drawn. And you can see the price move up and up and up, and there may even be another trend line in here providing support to the price. And here you can see this trend line is a little steeper than this one. I would call this acceleration. Now you can see the heights of these candles start to get a little small. They're certainly less than this one. And I believe volume at this time wasn't very bullish either, probably. So as soon as this high forms and the price starts to move through this lower level, we start to look for our next downtrend. So I start connecting peaks, right? Here's a peak, and then even just that first candle, drawing that line, that works for a while, doesn't it? That works for a good long while. Okay, so the price poked through that uptrending support, came up, and then boom, as soon as the price closed below this green uptrend, the price continued to fall, and that's when we have a confirmed downtrend, right? And once this new low is set over here, I'm going to adjust my trend line to not overwrite any of the price. And you can see how productive this line is. So we had 1, 2, 1, 2, 3, and then it was like a bigger 1, 2, and 3. There was this measured move down like motion along this downtrend. there's clearly a level of horizontal support and resistance right here. And this would be more, well, in the moment, I'd be watching it as a gap zone, right? And in a downtrend until a low is formed here, and then a new minor high is set, which is way up here. So at the time being, the price was trendless for quite some time. This is a few weeks of trendless action, and those moments are really uncomfortable. And I remember that. It was just really confusing. What's the price going to be? Is it going to be up in the 40s or down in the 30s? There was just no telling. But once this minor high is formed, we can then form our next trend line. And we do this by just simply taking the price and then not overwriting any of these candles and continuing onward until the price moves below it, which, look at that, there's another gap zone where the price fell through. So this was a positive support trend, you can see that, and then it breaks. And so then I'm going to start drawing my next downtrend. I'm going to do that by connecting these peaks, right, and not overwriting the price, which takes us to about right there. This was a pretty short trend, a pretty short drop compared to the others. And this is what periods of consolidation look like. When you start to have these weird, let me color this correctly. You can see these like weird T's that are shaped by these uptrends and these downtrends. Typically the longer wave or the longer trend is the primary trend, and then the shorter trend line is the corrective phase. So we had a good push up and then a short corrective phase down, and then the next trend line is actually shorter than this one. In terms of time though, it might be longer. Let's see here, this was like 14 bars, 16 days, and this was longer. So this was a longer but slower uptrend, and this is another corrective phase down. So the price did move sideways, and at that point, another small period of trendlessness, and this is really uncomfortable. I remember how uncomfortable this was. But as soon as the new minor high is set, we can start to draw our next uptrend. So I'm gonna go ahead and duplicate this uptrend and just apply it here. And would you fancy that? It has the same slope, but we wouldn't draw it there. We would say, hey, this is our uptrend, and we'd be using these candles back here to start that line. And it's difficult because it'd be flat, right? And we know that there's a horizontal level of support and resistance there because of these bottoms. Look at how close those bottoms are in price, right? So I'm gonna go ahead and I'm gonna duplicate this and say, hey, there's a level of support and resistance right there. Okay, so at this point, what chart pattern are we forming, right? What is it? We have congestion through here. The price is consolidating, so we're looking for a consolidation pattern of some sort. I can start to connect these trend lines to try to determine what it might be. And through here you can see 1, 2, 3, 4, false. Breakout, kind of 5. This kind of looks like a descending triangle, right? More than a triangle, it looks like a failed double bottom. And you can see that this bottom here and this bottom here would be our bottoms. There'd be this looks like an eve. I'm gonna call it an eve and an eve bottom. And when the price moves above this high, the pattern confirms, which it did do until it just broke. And this was a bull trap, and that drove me crazy. Drove me nuts. So at this point, we were either in a point of consolidation or we were trying to find the bottom. And you can see how the price continues to interact with this trend line, even though the price moved above it and out of it, right? As soon as we had 1, 2, 3, kind of 4, you can start to picture what's gonna happen next, right? So let's return to this price trend here, this corrective phase. This doji doesn't help me draw a line, but I'm going to use the open of that candle first. And I'm going to stop it right there because that's where it encounters the downtrend, right? So this is likely where we're going to see the price break down. And when the price broke out above, this was when I YOLO'd right here. This made a lot of sense to YOLO. This was an incredibly bullish signal in the price. Incredibly bullish signal in the price. But what do we see happen? A breakdown, a test of that trend line, and the price moved up again. And I thought, that's perfect, right? Breakout, test breakout price, move up. But then what? It didn't pass the high, the last high. So it didn't confirm that this downtrend was done. Instead, what we saw was this prolonged and dragged out throwback, right? All the way just about to the end of this triangle through here. And I don't actually remember what my patterns were. Let me have a look. This I was drawing this as a symmetrical triangle. Yeah, I took that touch point at the end of the falling wedge, and this consolidation pattern I identified as a symmetrical triangle. And then I took this horizontal level of resistance formed by that minor high and saw this ascending triangle. And those price targets on the bearish end were all met, right? So let's go back to our trend line here. Let's go, I think it was on blank, right? Yeah. So here we are. We're watching the price fail to make this bullish breakout, and it continues to fall and fall and fall and fall. And the big cue was when that horizontal price level near 33 broke. That was bad. Once that new low was set on this candle day right here, we can draw another downtrend, which I'm going to go ahead and do. And that would actually look something like this. All right, if we're not going to overwrite any of the price between here and there, then we're not going to overwrite those wicks. However, I like to keep it really clean. And when I do that, I start to use the open and close. So this candle right here, this is the opening price I'm going to use to draw that trend line. I'm going to make it red. I'm going to make it a little bolder than the rest. And then I'm going to turn on the right extension. And we're just going to follow it down. This is the trend we are currently in, is this downtrend. And we could have charted this downtrend way back here. This trend could have been clear on November 23rd. Incredible, right? Just nuts. So this trend exists. Meanwhile, the price continues to set lower lows, and we can see that these minor highs are starting to form their own downtrends. Downtrends inside of the downtrends, and you can see, so here's a low, okay, so there's that trend line right there. And this is where it starts to get messy, so I'm going to start deleting these. I'm going to keep this one though. So this was a downtrend. And when the price set this minor high, we can say, hey, guess what? We have an uptrend. Except that this uptrend was broken very, very quickly. And you can see that the price continued to move down even further. Jeez, and this was just nuts, right? This was nuts. And you can see that the slope of this trend line agrees pretty much with the tops of those candles. I'm gonna fix this a little bit. There we go, it looks better. And the price fell, and then boom, we had this big bullish breakout. At this point, everyone was crying, you know, for a big reversal and this inverted head and shoulders pattern that everyone was hoping would play out, including me. But the truth is remember, that pattern doesn't confirm as valid until that line is broken at the armpits. And what is right above that level? This massive downtrend. And I see us in a similar position now. Nonetheless, here we go. So let's chart our next uptrend. And I often like to draw these uptrends until they encounter a previously existing known downtrend, which would be there. And that was a good spot to draw this line. You can see the price move up and up, not break or even touch that trend before passing through that corrective phase. And here, this is where that price touched and then rejected and fell. Oof. And at price peaks and valleys, we're likely to encounter support and resistance, all right, which was the case right here. And now what do we see? We have a downtrending slope and a horizontal price of support and resistance, and one, I mean, I don't want to say two, but three, this was that descending triangle that I was describing. I'm gonna go ahead and figure out how I charted it. So I said, hey, I'm gonna use this high, like softly use this high. Kind of clean that up a little bit, a little slappy. But 1, 2, and 3, and I didn't really worry about this. All right, 1, 2, 3, 4, 5. I said this is kind of preliminary. I don't quite have enough touch points, but I went ahead and charted it anyway, and the price just fell. It reached that target, and that target is what's forming, or is turning into, I should say, this horizontal level of support and resistance. It's crazy, right? This is crazy. And this is how I've been able to successfully forecast this continued downtrend in the price. So let's just keep going. Let's take it all the way. Let's take it all the way from 772.62 to 14.23 or whatever it is. I'm gonna go ahead and duplicate this. At this point, it's pretty clear what's going on. Downtrend, corrective phase, downtrend, corrective phase, downtrend. So we can take that high and we can connect our peaks again. And at this point, I'm not even worrying about setting a new low first, because we're in a downtrend and we're following this really predictable pattern. So this was a pretty good speculation just to draw this line, right? And then once the price does set a new low down here, I can then raise this trend line to not overwrite any of that price and just extend it down. And it doesn't cross again till just recently this week when we had this big kick upwards. And this to me was just another corrective phase, right? Which has already broken down, incredibly enough. And so what? The price now is in another steep decline. How far will this go? I don't know. I don't know how far this will go, but what I see is a continued move downward. I'm gonna go ahead and duplicate this because there is another level of horizontal support and resistance right here. And today the price closed right above that. Going forward, if the price closes below this 1424 level, the next significant levels of support and resistance are really low. We'll have to go back to, pre-June to find those price points, okay? And that's disconcerting because I think most of the positions in AMC are actually in those lower price levels. So there's going to be a little more support there unless those people start to let go of their shares. And there will be a portion of people letting go of their shares. That will happen. There will be selling and short interest will go up. As you can see, we're already beyond this $20 level. All right, so 1450 is here. The next significant level is probably 12. And after 12, I wouldn't be surprised just to see a fall to 8. And then there's going to be a nice strong level here at 5. I really don't see the price falling to 5. I don't know what the share price of AMC should be until the company starts to really post a real profit, right? I mean, 4 cents of cash flow per share. I don't even understand how they posted that or how they said that, because they revealed that their operating cash flow was still negative, right? So I don't know how that works, but the price of AMC per share should be probably down here somewhere on a fundamental basis, all right? I mean, it's nuts, but that's just what the price action has been showing us, and it's insane just to see this. I know this is very disheartening, but this is the trend line analysis that's been correct for a long time. I've taken a lot of criticism for being a bear because I'm not very polite about it, right? I'm not really a bear. I just trade the trend, and the trend has been down. So that's my incredibly long-winded discussion about trend lines and chart patterns and how I see them forming. I think in conclusion, what I want to say is, and maybe this will provide a glimmer of hope to some, you can see that this might be a big shoulder. All right, this could be a huge shoulder and this could be a head. The price could move up, find resistance somewhere in here, probably up here towards $30, and then turn down. All right, I'm gonna start using these lines to draw now. And if the price can find support at that $20 level, it may move higher, all right? This would be the biggest head and shoulder bottom ever that I've ever seen, but this is possible. I'm not saying it's likely, but the first thing that needs to happen is this big trend line needs to break first, all right? I'm not even going to entertain the idea of a reversal until I see the price cross this line. It must cross this line. I am not bullish in any way, shape, or form until the price crosses this line. It has to. And if it can't, the horizontal levels of support and resistance, they grow thin and weak, I think. And we can just expect more of the same. But this is the big measured move down. 1, 2, and 3. And this could be the end of that move. It really could be. But it's not shaping up to be that way yet. So, whew, that was a lot of talking. I'm gonna need to edit that probably.